Welcome to our deep dive into the world of fintech.
Yeah.
You've given us a stack of recent articles covering a range of companies and trends, and we're here to help you navigate this complex landscape.
Absolutely.
I'm excited to break it all down and extract those nuggets,
Right?
those valuable nuggets of information.
That's right. We've got everything from open banking in Europe to cryptocurrency adoption in El Salvador.
Yeah.
I'm excited to break it all down and extract those valuable nuggets of information.
First up, let's set the scene.
Okay.
Fintech is a global phenomenon, and these articles showcase its reach across diverse locations. Brazil, Bahrain, Ethiopia, UK, Philippines, Turkey, UAE, the US. It's truly remarkable.
What's fascinating here is that this isn't just limited to established financial hubs.
Right.
Fintech is popping up everywhere, and the speed of growth is remarkable.
Yeah.
One article even projects the global gaming market to reach a staggering $1 trillion by 2030, with fintech playing a huge role in that expansion.
$1 trillion.
Yeah.
Talk about leveling up.
Leveling up.
What I find particularly interesting is that even with the current economic uncertainty,
Right.
European fintech investment actually increased 10% in 2024, reaching $8.7 billion.
This increase, despite economic headwinds, shows just how much confidence investors have in fintech's potential to disrupt traditional finance.
Yeah.
They see the opportunities for innovation and are betting big on companies that can deliver it.
It's not just about the money, though. Regulations are also shaping the global landscape.
Right.
It can feel like regulation is where the fun stops,
Uh,
but are we seeing that play out here?
Regulation is always a double-edged sword.
Yeah.
Frameworks like MiCA in Europe are creating a more standardized and transparent environment for cryptocurrencies,
Right.
attracting established players like Gemini and Signum.
Okay.
This brings legitimacy and paves the way for broader adoption.
So while MiCA brings legitimacy, are there concerns about over-regulation stifling innovation in the crypto space?
Absolutely.
Okay.
Take the Dutch government, for example. They're taking steps to prevent the expansion of buy now, pay later services in physical stores.
That's an interesting move.
Yeah.
What's driving that decision?
Concerns about potential financial risks for consumers, particularly younger ones who might be tempted to overspend and accumulate debt. It's a reminder that while innovation is exciting, we need to consider the potential downsides.
It seems like finding the right balance is key.
Yeah.
Now, shifting gears a bit,
Okay.
one trend that's been making waves in the UK and EU is open banking.
Open banking has been a hot topic for a while now.
Yeah.
But how familiar are you with the concept?
I know it's where banks have to share your data with other companies if you give them permission,
Right.
which always makes me a bit nervous, but I'm eager to learn more about how it works in practice.
Well, open banking is designed to empower consumers and businesses by giving them more control over their financial data. We have several articles here highlighting different aspects of this.
The articles mention things like variable recurring payments. Those sound vaguely futuristic. What are they all about?
It's all about flexibility and convenience.
Okay.
Imagine your gym membership payment automatically adjusting based on how often you go. That's the power of VRPs.
Wow, that would be incredibly useful.
Yeah.
I can definitely see the appeal.
Right.
Are companies actually using this technology?
Absolutely. Companies like Trustly and GoCardless are at the forefront, offering streamlined bank payment solutions and innovative tools for recurring transactions.
Wow.
They're essentially making it easier for businesses to get paid and for consumers to manage their finances.
So open banking isn't just some abstract concept. It's actually impacting how businesses and consumers operate.
Precisely. And while open banking is gaining traction, traditional banks are also making moves in the payment space,
Okay.
some more successfully than others.
Are they trying to catch up with all these fintech disruptors?
You could say that. For instance, JP Morgan is launching a new range of point-of-sale terminals, specifically designed for the food service and retail sectors. It's a clear sign that they recognize the importance of meeting evolving customer demands in a rapidly changing market.
So they're embracing the digital transformation instead of fighting it.
Yeah.
What about other banks? Are they all jumping on the fintech bandwagon?
Not necessarily.
Okay.
We have a really interesting example here of HSBC, a global banking giant, deciding to shut down its digital banking app, Zing. It seems they're streamlining their operations and focusing on their core businesses.
That's surprising. A big bank shutting down its digital app. What happened there?
It seems Zing faced some challenges from the start.
Okay.
It had a rocky post-pandemic period and struggled to attract a large user base.
Yeah.
The article mentions that HSBC ultimately decided it wasn't a worthwhile investment compared to their other initiatives.
It's a good reminder that even the biggest players can stumble in the fast-paced world of fintech.
Exactly.
Yeah.
It's not enough to just launch a product. You need a clear strategy, a solid execution plan, and a deep understanding of the market you're operating in.
Okay, so we've got a global fintech boom, open banking shaking things up, and traditional banks trying to find their footing in this new landscape. It's a lot to take in.
Yeah.
But before we move on,
Okay.
I'm curious, what's the most surprising thing you've learned so far?
I think what's fascinating is how these seemingly separate trends,
Right.
global growth, regulation, open banking, traditional banks adapting, are all interconnected.
Right.
They're all pieces of the same puzzle shaping the future of finance in profound ways.
That's a great point.
Yeah.
And speaking of interconnected trends, it's time to dive into the world of AI and automation. That's where things get really interesting.
Yeah, absolutely. It's not just about automating tasks anymore. AI is being used to make predictions, personalize experiences, and even detect fraud in ways that were unimaginable just a few years ago.
That's right. Let's dive deeper into how AI is being used in finance right now. What are companies actually doing with it?
The Agentic AI article provides a fantastic overview of this trend. It highlights how AI is being utilized for everything from fraud detection and credit scoring to personalized financial advice. It's almost like having a hyper-intelligent, always-on financial advisor in your pocket.
That's an interesting analogy. But how does this differ from the robo-advisors that have been around for a while now?
These AI systems go beyond simply recommending investments based on your risk tolerance. They can analyze massive amounts of data, identify patterns, and make predictions with a level of speed and accuracy that humans just can't match.
It's pretty impressive. Are there any real-world examples of this happening right now?
Absolutely. We even have a specific example from the UK Nationwide Building Society is utilizing GPT-4, a powerful AI model, to generate letters.
That might seem like a small application, but it speaks volumes about how AI can streamline even the most mundane tasks, freeing up employees to focus on more strategic value-adding activities.
Exactly. It's about finding the right balance between leveraging AI's analytical capabilities and nurturing human expertise where it truly matters.
This brings up an important question. While AI offers so much potential, there are also concerns about it replacing human jobs. What are your thoughts on that?
It's a valid concern, and it's something we need to be mindful of as AI becomes increasingly sophisticated. However, the Agentic AI article emphasizes that many companies view AI as a tool to augment human capabilities, not replace them.
So it's more about collaboration than replacement.
Precisely. Think of it like this. AI can be the co-pilot, providing valuable insights and recommendations, while human expertise remains firmly at the controls guiding the overall strategy.
That's a great way to frame it. But we can't ignore the potential downsides of AI. What risks should we be aware of?
The Agentic AI article doesn't shy away from those risks. It specifically highlights the dangers of AI-driven fraud, deepfake scams, and data misuse. These are serious concerns that require careful consideration and mitigation strategies.
Deepfake scams sound particularly terrifying. Can you elaborate on that a bit more?
Deepfakes leverage AI to create incredibly realistic but entirely fabricated videos and audio recordings. As this technology becomes more accessible, the potential for malicious use increases dramatically. Imagine receiving a video call from someone who looks and sounds exactly like your bank representative, but it's actually a scammer trying to steal your financial information.
That's a chilling thought. It underscores the importance of being vigilant and staying informed about the latest scams and security threats.
Absolutely. And from an ethical perspective, it highlights the importance of responsible AI development. We need to ensure that these powerful technologies are used for good and that appropriate safeguards are in place to prevent misuse.
So AI is clearly a powerful tool with both immense potential and inherent risks. Now let's turn our attention to another area of fintech that's pushing boundaries: cryptocurrencies and stablecoins.
We can't talk about fintech without talking about crypto. It's become such a dominant force in the financial landscape.
It's true, crypto is always a hot topic. What are some of the latest developments in that world?
We have several articles highlighting interesting trends. For example, Bybit, a cryptocurrency exchange, has launched a QR pay feature in Brazil, allowing users to make payments using stablecoins through the Pix system.
So you're saying that in some places you could potentially buy your morning coffee with crypto?
We're getting closer. The article mentions that this integration aims to simplify transactions and offer lower fees compared to traditional payment methods.
That's pretty cool. Are other companies jumping on the stablecoin bandwagon?
Definitely Nubank, a major digital bank in Brazil, is now offering a 4% annual return on USDC holdings. It's a way to attract users and encourage broader adoption of stablecoins.
A 4% return is significantly better than what most traditional banks offer on savings accounts. It makes you wonder if stablecoins could be the future of payments.
It's hard to say for sure, but they're certainly gaining traction. We even have an article about One Money, a Layer 1 blockchain specifically designed for stablecoin payments, which just secured $20 million in seed funding.
Wow, that's a significant investment. Seems like investors are confident in the future of stablecoins.
It certainly suggests that they're more than just a passing fad. Stablecoins have the potential to disrupt the way we think about money and payments.
Speaking of disruption, what about El Salvador? They made headlines a few years ago by adopting Bitcoin as legal tender. How's that experiment going?
It's been a mixed bag. The article mentions that they recently purchased 12 more Bitcoin, despite an agreement with the IMF to scale back some of their crypto-related policies.
So they're doubling down on Bitcoin. That's a bold move.
It is. And it remains to be seen whether it will pay off in the long run. The article highlights both the challenges and successes they faced, including issues with adoption and volatility.
It sounds like a real-world case study of the risks and rewards of crypto.
Exactly. It's a fascinating example of a country trying to navigate this new financial frontier. Their experience provides valuable lessons for other nations considering similar moves.
Okay, so we've covered a lot of ground here, from the global fintech boom to the rise of AI and the intriguing world of stablecoins. It's clear that the financial landscape is undergoing a massive transformation. But as exciting as these advancements are, we can't forget about the challenges that come with them.
That's a great point. With all this innovation come challenges. Fintech companies are facing regulatory hurdles, competition from traditional banks, and the ever-present threat of cyber attacks.
Those are some serious hurdles. Where do you see the biggest potential for growth and disruption in fintech despite these challenges?
One area I'm particularly excited about is the convergence of AI, open banking, and blockchain technology.
Now, that's a powerful combination. What could that look like in practice?
Imagine a world where financial services are personalized, secure, and accessible to everyone, regardless of their location or income level. We're already seeing the building blocks being put in place with advancements in each of these areas.
It's an exciting vision of the future of finance, but as you mentioned, there are also significant challenges to overcome.
That's true. And navigating those challenges is what will determine the ultimate success of fintech.
Right. So before we wrap up, let's take a closer look at those challenges and opportunities that lie ahead for fintech. So let's talk about the challenges facing fintech companies. We've touched on a few already, but it's worth diving a bit deeper.
Absolutely. One of the biggest hurdles, especially for companies in the crypto space, is navigating the ever-evolving regulatory landscape. It's a bit like trying to hit a moving target.
I can imagine regulations can change so quickly, and staying compliant must be a major undertaking.
Exactly. And it's not just about keeping up with the current rules. Companies need to anticipate future changes and adapt their business models accordingly. This can be especially difficult for startups with limited resources.
Makes sense that this regulatory uncertainty would lead to consolidation in the industry.
That's exactly what we're seeing. Smaller players are either being acquired by larger ones or merging to pool their resources and expertise. It's a classic case of survival of the fittest.
But it's not just about size, is it?
No, not at all. Companies need to be innovative and adaptable to stay ahead of the curve. They need to find ways to differentiate themselves and offer something truly unique.
What about competition from traditional banks? They're not just sitting on the sidelines, are they?
Definitely not. We've already seen examples of this, with JP Morgan launching its new POS terminals and HSBC shutting down its digital app. Traditional banks have a lot of advantages: established customer bases, brand recognition, and deep pockets.
So how can fintech companies compete with those giants?
By focusing on areas where they have a clear edge: agility, innovation, and a customer-centric approach. For example, fintech is making significant inroads in financial inclusion. Companies are providing financial services to underserved communities that traditional banks have often overlooked.
That's inspiring, using technology to empower people who haven't had access to traditional financial systems.
Exactly. It's a powerful example of how fintech can have a positive social impact.
So we've got regulatory hurdles and competition from traditional banks. What other challenges are out there?
Cybersecurity is a major concern. As more and more financial transactions move online, the risk of cyber attacks increases dramatically.
It's like a never-ending arms race.
It is, and it's something that all fintech companies need to take seriously. They need to invest in robust security measures to protect their customers' data and prevent fraud.
Speaking of security, one of the articles you gave us talks about Tread, a UK green fintech firm that recently went out of business.
That's right. They cited the impact of new financial regulations around fraud reimbursement as a key factor in their decision to wind up operations.
It's a shame to see a company with such a positive mission fall victim to these challenges.
It is a reminder that balancing innovation with security and regulatory compliance is a delicate act.
Okay, so we've talked about the challenges, but let's shift gears and focus on the opportunities. Where do you see the biggest potential for growth and disruption in fintech?
I'm most excited about the convergence of AI, open banking, and blockchain technology.
Yeah.
Imagine a world where financial services are personalized, secure, and accessible to everyone. I believe this vision is within reach.
That's a really compelling vision. It sounds like the future of finance could be incredibly bright.
I think so too. But it's important to remember that this future is not guaranteed. The choices we make today will determine the direction we head in.
That's a powerful reminder that we all have a role to play in shaping the future of finance.
Absolutely.
So as we wrap up this deep dive, what are the key takeaways you want our listener to remember?
First, fintech is a global phenomenon that's transforming the financial landscape at an unprecedented pace. Second, AI, open banking, and blockchain technology are converging to create exciting new possibilities. And third, the future of finance is not predetermined. It's up to all of us to shape it in a way that benefits everyone.
Those are some great insights to keep in mind. Thank you for taking us on this journey through the world of fintech.
It's been my pleasure.
Listener, we hope this deep dive has provided you with valuable knowledge and sparked your curiosity about the future of finance. Until next time, keep exploring, keep questioning, and keep innovating.